Hey boys and girls, so I'm pretty inundated with messages. I get about 50 direct messages on Facebook a day, hundreds of emails, and I'm getting a lot of questions about what the hell is happening with crypto. You're awfully quiet, Siam, during this bull market, yada yada yada. So I thought I'd make a really quick video talking about why alts are about to boom, basic on-chain analysis, why we're nowhere near the top, talk about lengthening cycles quickly, and then cash flow and how really you should convert your whole portfolio into a cash flowing portfolio, along with a little bit of a warning. So first of all, let's crack on why alts are about to rise. So the thing that you need to realize is that with crypto at the moment, and I think for the foreseeable near future, the same thing happens. So what happens is Bitcoin dumps and then alts dump the same day or a few days later, but it over exacerbates the move. We then have Bitcoin rallying a bit, and then alts rally 10 times harder. You have to understand that Bitcoin is now $1 trillion asset. So in order for Bitcoin to double in price, right now, for Bitcoin to double, you need another $1 trillion to flow into it. Whereas alts, are inherently a lot smaller. So let's take, a relatively big one that may be $10 billion market cap. In order for that to double, you only need another $10 billion to flow into it. So alts, just by simple maths, will always outperform crypto up and also down. So when we're seeing, if we just crack open the charts and just look at Bitcoin right now, Bitcoin yesterday did almost a 10% move. So if we look at yesterday's candle, it basically from the very low, whoopsie daisy, that is the wrong one. I want the date price range. So from the up there, yeah, it's 9.5% move, which is fine. But on the same day, alts, there are many alts that did far more. Okay, it's just that Bitcoin is a pretty big price, so a 10% increase is going to be like a $5,000 move. But now that we've broken key resistance, etc., well, initial resistance, the big one that it needs to break is 65k. But now that it's starting its leg up, alts over the next couple of days and onwards are about to moon. And also when we're looking at the market share of Bitcoin, don't call it dominance, stupid word, it's Bitcoin market share. This is awfully much like a dead cat bounce. What we will see, mark my words, over time, that Bitcoin will drop precipitously, and it will probably most likely stay between 10 to 20% market share for a long time. So right now it's pretty high at 42%, but this is going to start dropping as alts rally. And so as alts rally, you're gonna see this drop, and alts are gonna start eating up and gobbling up Bitcoin's market share. So if you have Bitcoin, well, I've never bought Bitcoin and held it. Never have. It's this massive oil tanker, or this unsinkable aircraft carrier that takes 10 miles to turn around. It's already gone up something like 58 million% from first price discovery in 2010 when it was at 10 cents. So it's done its thing. Whereas alongside this big old aircraft carrier, there's way faster boats, if not aeroplanes, that will always outperform Bitcoin. So having Bitcoin or even Ether in your portfolio is like having a massive anchor in your portfolio, even though I still think they're all going to moon. But some will moon a lot less than others. So for example, let's take Solana. That's going to moon a lot harder than Bitcoin, and Polkadot, etc. So I could just name any old coin really. So that's one thing that you have to be aware of. So that's, I guess, one reason why alts are about to moon. Now in terms of basic on-chain stuff, what I did the other day, so every Monday to my students I release a on-chain analysis video, and I do everything I do in real time. I put in this Telegram, every single trade. And when was it? It was probably Monday, whatever date that was. No, that's something else. I can't remember. What's 5 days ago, auto cake. God damn it. Anyway, there is a video up here, somewhere here. Oh Jesus, what date was it? It's the 4th. Where is the 4th? Here we go. Let's go back down to the 4th. Yeah, this is pretty active. There will be, here we go, on-chain update. As I said, probably the most bullish I've ever seen in some of these metrics. And I was basically saying in further posts that things are about to surge. Now, we don't have time to go through the whole caboodle, but if we just go onto Glassnode and look at my little supply metrics, some really interesting charts here. So this is one of the most important charts out there. So this is the exchange net position of all exchanges, and it basically shows you the flow of Bitcoin. And if we just, in fact, we don't need to open this wider. Basically, when it's red, it shows that Bitcoin is flowing out of exchanges, and when it's green, it's flowing into exchanges. So when it's green, it basically means people are putting their Bitcoin from their wallets back to the exchange so they can dump it, and vice versa. So big red means people are hodling, they're extracting their Bitcoin from the exchanges. And if you just look at the amount of red, and it's hundreds of thousands, multiple hundreds of thousands of Bitcoin flowing from the exchanges, this is incredibly bullish. And because if you then look at this chart here, this just shows you how very little Bitcoin are on exchanges right now. It's down to the lowest it's ever been. So the ability to really dump Bitcoin right now has been taken off the table. So in order for a massive crash to happen, this needs to start spiking up, this needs to start spiking up, and we'll see that long before the crash actually happens. So this is incredible. It's incredibly bullish. You can see some other bits and bobs. I don't want to bore you with some of the other stuff. Activity, hash rates dropped off. Oh, sorry, it is increasing. Remember, hash rate precedes price. The only reason we had this crash was because China banned the Sichuan province miners. They had to literally pack up and leave, factory scale mining rigs. And so I said at the time, it's going to take 3 to 6 months before they can set up again in another country somewhere friendlier. And that's what's happened. So they're now back online. So not only did the rest of the world pick up the slack when they went offline, they're now back online, and guess what's happened? We're seeing a big old uptick in hash rate. So price is definitely going to increase. The derivatives, everyone got absolutely wrecked. So if we look at anyone that was dumb enough to do a Bitcoin short, they got absolutely wrecked, and we're pretty much at the lowest in terms of Bitcoin shorts that we've ever seen ever. And there's been a slight unwinding of Bitcoin longs as well. But either way, when we look at sort of datamish.com, look at if I just go to sort of 360 day, look at this. So there's a dramatic amount of longs as opposed to shorts, which is normal, but it's just bullish. The shorters have gone out, have disappeared, and basically anyone using leverage the wrong way has got wrecked. So there's not much derivative exposure these days, but it's positive. The futures perpetual funding rate is positive. So if anything, it's net long, but there's not much of it. Adjusted SOPR is good. It basically means pretty much everyone is in profit right now on Bitcoin. Anyone that's left in, all the tourists are buggered off because they got hurt because they bought and sold at the wrong times, but people still in. The market's rising. It's soaking up all of the sales without the market crashing, which is good. In terms of so if we're looking at Grayscale, there's a bit of an uptick in their assets under management in terms of Bitcoin. So that's quite promising as well. And in terms of top and bottom alerts, we are nowhere near a top and nowhere near a bottom. I could go on to everything, but one of my favorite charts is the realized hodl ratio. And this accounts for everything. It even counts for sort of double peaks like we had in 2013. But long story short, when we're in the red, you need to get nervous and start exiting. When we're in the green, you need to start buying, and buying like a banshee. We are nowhere near an overstressed market yet. We're going to clear these recent highs, and we're going to go a lot higher. So so we're nowhere near an overstressed market, and most other metrics are showing exactly the same thing. So let's get rid of this. let's put this right at the end. So in terms of realized profits, it's very similar to SOPA, I guess. Newpool, but we're now showing positive profits, which is good. If we look at the hash rate is just spiked up, and therefore price will proceed, so to speak. If we're looking at young and old coin supply, I prefer to call it dumb money versus smart money. The dumb money are the tourists that come in at the last minute, buy at the worst time, and then sell at the worst time. The thing you need to realize with this is that whenever you have an overlapping of dumb money and smart money, that always signals the high. So what you then need to look for is a divergence between the smart money and the dumb money, and the divergence shows that the smart money are gobbling up all of the Bitcoin that the dumb money is selling and leaving, getting out of the market. And so when you see that divergence, it's a good indicator that you need to start accumulating, because whales accumulate not just in one big hit, they accumulate over time. And then when you start seeing a contraction, so if you keep going forward like this, when you start seeing this contraction, that's an indicator when you need to somewhat get a little bit nervous. And then when it finally crosses over, now you can start selling, because what's happening is that all the smart money is selling all of the crypto to the dumb tourists that are coming in. And then guess what? Catches the peak. And then you just wait until you start seeing the divergence, and there we go. You can start buying, accumulating over time. Whoops, we're now converging. You need to start getting slightly nervous. We only had a little wobble, wasn't much, but look what's happening right now. Massive divergence. Therefore, we have banks, billionaires, and countries racing to hoard as much Bitcoin as possible. Do you really think we're going to have another crash? No, sir. Or no ma'am. The Mayer multiple is one of my favorite models in terms of catching highs and lows. We are smack bang in the middle. We are nowhere near the sell zones. Mayer multiple is like, it just measures the elastic band connecting Bitcoin to the 200 EMA. So a simple moving average. So yeah, this is really good. Again, likewise, it catches lovely intermittent highs, which is great. Again, when you're looking at the realized price, the floor is rising pretty cool, which is pretty good. But again, we're nowhere near the sell zone. That's data mesh, that's that. And I could go on and on and on, but this is just a basic overview that I wanted to go through. Now let's talk about lengthening cycles. So I have always been a big fan of the big stock to flow model. So if we look at stock to flow, and let's just click on any of them. What it clearly shows is that there has been a 4-year cycle, but we've only got really 3 data points to look at, and we should, what stock to flow is basically showing us is we should see a high by December. And although I still think we will see massive rallying in November leading into December, I don't think it's going to be like before. A lot is changing. A lot has changed over the last couple of epochs. And so when you're looking at other stuff like Bitcoin's performance since halving, remember, it's very mathematical Bitcoin. The only constant in Bitcoin is the halving every 4 years. So measuring performance from the halving, I believe, is probably the most sensible thing. And we're nowhere near the high yet. But if I were to get a little doodle pen, I don't know how I can do this. In fact, what I'll do is I will take a little screenshot, then I can doodle on this on Microsoft Paint. Paint never lets me down. There we go. So if I was to grab a big fat green brush, something like this, and just look at the highs of the previous epochs, it's there, there, and there, and try, what you can basically see is some form of a curve. Obviously I can't draw curves to save my life. Something like that. And so looking at this where we are right now, there's some sort of cadence here. So let's just say it's going to be around here. So we'll probably see rallying like this, or actually let's probably It'll be something like that. There's always a blow off top, like we've seen over here, here, and here. So there's always a blow off top. Now what this means is that, okay, we're looking at something like a 15x multiple from the previous halving. So what is a 15x multiple? So if we then look at the price, standby. It's around the 24th of May 2020 off the top of my head, which was the last halving. So if we go to May, somewhere around here, we're looking at sort of like $9,000. So what is 15 times $9,000? I can't do that in my head because I'm an idiot. Times 15, we're looking at $135,000. So what, obviously we've only got 3 data points, which isn't good for statistical analysis, but basically it's saying that this high around here will be around $135,000. Now again, this goes against Plan B's S2FX model, the stock to flow cross asset model, but I think this is a nice sensible option. And then when you extrapolate, okay, how long is this roughly going to take? So whoopsie, I can't draw lines either. We're looking at something like what is that? Let's split the difference ish. Let's call it 700 days. So you then work out 700 days from where's my mouse? Come on, mouse. Let's do date calculator. Click any of them, doesn't matter. So if we put in 20th of May 2020, and then just work out what 700 days ish from that date, gives us a result mid-April 2022. So if we just click back over here, so mid-April, Feb, March, so it's around here. So if we were to then stretch this a little bit, again, if I just to grab a pen, it means that we're going to most likely do something like this, except it's going to be a lot faster. And then no, I can't draw. Where's May? April. Yeah, something like that. I can't draw, but yeah, we're looking somewhere around here, which is why I actually think over the next 6 months, or what is it, November? Yeah, over the next 6 months, I am personally looking at between. I'll do it on this over here. In terms of Bitcoin alone, I think we will see between $100,000 to $150,000 because we always overshoot the mean, and then there's mean reversion and etc. So that's what I'm looking at. I know a lot of people are quoting 300k, but I don't know, I'm a bit more measured, I think. So yeah, so that's that. What else are we supposed to talk about today? Lengthening cycles, yep. So yeah, December will be great, but I don't think it's going to be the pop. Cash flow. Yeah, okay. So the first warning I'm going to do here is remind you of this picture. And it's basically why I don't post a lot on social media anymore in terms of what I'm doing exactly, what coins I'm buying, because people are idiots in general, and they will misquote you. They'll see a video I did 3 years ago where, oh, you recommended getting into Tron, which I did, made 350k profit from Tron, because I got in at like 2 cents, 2.5 cents, it ran to 30 cents, and then I got back out at sort of 21 cents. But then people watch these old videos or old posts and then still hold me to it, thinking I'm still in it. No, I'm not. You have to pivot with the times. So the most important thing here is this point 3. Assuming you're following a profitable trader with a 40% win rate, let's say me, for example. Mind you, my FX moves are about 40% win rate, but my crypto moves, I'm about 80% accurate. Anyway, if you loosely copied them, you may copy a couple of winners, but then after 2 losing trades, you may think, this person is an idiot. Think I'll give it a rest. You then may miss out on 2 stonking trades and think, balls, we'll start following again, only for the next couple of trades to lose. This happens all the time. So the trader is profitable, but because you've been selective, you've ended up with a worse win rate and negative profit. So all I'm going to say is that I think it's worth, in order trying to catch the highs and whatnot, it's worth swapping your whole crypto mentality around cash flow. So by the way, that was the little warning. And so in terms of cash flow, what I personally do is I have most of my crypto in my company, because if you're getting staking rewards in your own personal name, that's treated as income tax. Now I'm paying 40% income tax. That means I'll be giving almost half to the government in terms of my staking rewards. So I don't do that. I have all my cryptos in limited companies. That then and then I typically have two pots. I have my saucy pot, and then my stable pots. Now these are both cash flowing pots, except there's really sort of high yield over here with this pot, and the cash flow from that, I then buy up more stable stable cryptos which have sort of a lower yield. So ballpark, in the stable pot, I'll have stuff like Solana, ADA, Polkadot, all that sort of stuff. The stuff that has typical AVAX, Atom, all that sort of stuff. And the average yield will be anywhere sort of 7 to 13% yield. But in my saucy pot, it's more like sort of 70% plus. And so as a result, what's happening at the moment is that my saucy pot, not only do you get the PAG, the potential appreciation growth of the coins, but as the price goes up, so too does your income. So this saucy pot right now is chucking out about sort of, conservatively speaking, £700 per day. And it is increasing. And then every week or every month, I then just go out and buy a whole bunch of other coins like this lot. And so basically you need a golden goose. You don't eat the golden goose, do you? You don't have a golden goose for a Sunday roast and then you're left with nothing. You need to create a golden goose, sit on it, and then eat the eggs that it shits out every day. And then let some of those eggs hatch into another smaller golden goose, and then eat those eggs, or do whatever you want with the eggs. So don't eat the goose, eat the eggs. So that's what I'm doing. Obviously, yeah, I don't stake on exchange because you don't own your keys, but yeah, I think that's it. I have been speeding through this. This was supposed to be like a 7-minute update. It's now 22 minutes, and I've been speaking pretty fast. So anyway, hope this helps. Anything else do I need to cover? Why do I have a carousel here? Oh yeah. Basically, you have to understand that the media, last thing, and then I'll call it a day. There's always a positive carousel and a negative carousel. So on the positive carousel, there's all sorts of good news going, like the Bitcoin Lightning Twitter integration, where you can send, money cross borders instantly for free. I mean, epic, or very, very close to free. And then on the the FUD carousel, there's all sorts of stuff. And so you have to remember that journalists know nothing. They never know anything. They should be banned. But so when looking at Bitcoin, you see this little breakout over here, and everyone goes, "Oh, it's because George Soros is now buying crypto or whatever." No. That's what journalists have just plucked out of the positive carousel, going, "Why is this? It's one of the let's pluck whatever." There's always a carousel, a good a constant stream of good news and bad news, and they just pluck something, and then other websites copy another journalist and other It's nothing to do with George Soros. This is due to on-chain analytics being the most bullish I've ever seen in my life. Simple as that. Right. Gotta go. In anticipation of some questions, if you want to get access to the Telegram and everything else that we do, and have access to all of my alerts. And by the way, we're up over 200% in the last couple of months, even during this sort of downturn. One of them was, getting in at Axie down at $79 a few days ago, getting out around up here, buying back in on a pullback, and we're now staking that. But there's all sorts of stuff. I mean, look at it against Bitcoin. Your whole portfolio value would have gone up a lot. But just check out The Realistic Trader. I share probably 19 the stuff I put out on YouTube is less than a tenth of what I put into my Telegram and all the videos and stuff like that. So yeah, check it out. I hope it makes sense. Have a dandy weekend, and hope you enjoy Uptober.